The banking and finance world had braced for a hammering. It came in the form of Royal Commissioner Kenneth Haynes' 1,000-page report, scathing, damning of the banking culture. In almost every case, the conduct was driven by profit and gain. It lists 24 referrals for institutions to face possible criminal or civil action. Westpac wasn't named, but 2 referrals were termed secret. Any decision about bringing proceedings is a matter for the relevant agency, not for me, he said. But he went on, there can be no doubt that the primary responsibility lies with their boards and senior management.
Banks understand that these failures have caused deep hurt, suffering and heartache.
Special mention for NAB CEO Andrew Thorburn and Chairman Ken Henry, both slammed. I'm not as confident as I would wish to be that the lessons of the past have been learned, adding that Dr Henry seemed unwilling to accept any criticism. The report makes 76 recommendations for consumers, sweeping changes to loan arrangements in a move that could decimate the financial planning industry. He recommends that the borrower, not the lender, should pay the mortgage broker fees and the bank's fees. I recognise that suggesting that banks charge an additional fee will be difficult for some to understand, but it's necessary, he said, to create a level playing field.
Banks are going to stick to selling things, which is what they do, and advisors will be able to be advisors.
He wants recurring commissions on mortgages prohibited. Why should a broker whose work is complete when the loan is arranged continue to benefit from the loan for years to come?
The Commissioner has recommended a complete overhaul of the mortgage broking system so that it works for consumers rather than working for banks.
In superannuation, he wants new systems to guarantee every person just one super account. He wants a ban on the hawking of both superannuation and insurance products, and to stop the fees for no service rorts, ongoing fees to be confirmed annually. Commissioner Haynes' report also recommends an overhaul of the watchdogs, APRA and ASIC, recommending a third body should watch them both, saying too often Australia's financial institutions were simply not held to account. Chris Reason, 7 News.
Let's go straight to our political editor, Mark Riley now. Mark, this is the commission the government fought against.
That's right, Mark, and every time the government now talks about how it's cleaning up the financial sector, you can expect to hear Labor scream the number 26. That's how many times Scott Morrison, as Treasurer, voted against this inquiry. The challenge for his government now is making changes that turn the banks away from this focus on greed towards need and tip the balance back in favour of customers without harming the economy. Investing the government's political future in a report it didn't want.
It's a scathing assessment of conduct driven by greed.
Now promising the banks will pay with interest.
From today, the banking sector must change and change forever.
Changes, he says, will protect consumers, restore trust and ensure those who've been fleeced are repaid, including a $30 million compensation scheme of last resort for those swindled by companies that no longer exist.
The public is entitled to expect that the law is applied and enforced.
Accepting most of the 76 recommendations but balking at one, a crackdown on mortgage brokers. He says that will do too much harm. As for the watchdogs, ASIC and APRA,
Commissioner Haynes has found the regulators wanting.
Announcing a new body to regulate the regulators and expanding the federal court to speed up hearings into corporate crimes.
This misconduct must end.
But with no time before the May election to legislate changes, the parties will now take their policy responses into the campaign. Bank shares rose today. As for the government stocks, it's just hoping it's done enough to prevent a further voter withdrawal.
Today is the day that Scott Morrison and his entire government should hang their head in shame.
Saying it was Labor that fought to lift the lid on the misconduct.
They voted 26 times to avoid this report ever seeing the light of day.
The government wants the political caravan to move on.
Our principal focus is in restoring trust
in the banks and his government. Mark Riley, 7 News.
And our finance reporter Gemma Acton joins me now. Gemma, will this mean real change for customers?
Well, Mark, let's start with the good news. This report really exposed how often financial advisors worked in the interests of banks and not their customers. So there's going to be a huge overhaul going forward to the way they're paid in terms of commissions, bonuses, etc. And so going forward as customers, we should expect to be sold more appropriate products, and there'll be less attempts to bamboozle us with all sorts of information that just confuses us. Now, the flip side, of course, is that this is going to be really expensive for the banks. They're being asked to overhaul their cultures, their whole governance, all of their internal systems. Where banks have the opportunity to pass on costs to customers, they generally try to do so. So this could result in higher priced products or increased interest rates. Finally, we know there's been a big crackdown on lending in recent months. The report gave no indication this is going to stop, and in fact could even get worse in the months ahead. Mark.
OK, Gemma Acton on a big day in Canberra.